Can you acquire shares this morning?
It's a heck of a lot more difficult than it was earlier this summer. We, in fact, would be a bit more cautious here. Essentially, what we've seen is obviously what we think is the beginning of what you would call the blow-off upside phase in the Nasdaq. But unfortunately, what that's entailed the last several weeks is the rest of the market is basically treading water. And that tends to not be terribly healthy when driven to extremes. So we'd be a little cautious here.
The microeconomic word is ambiguity. Julian Emanuel, yields are going up in an ambiguous way. Are they ambiguously good for equities or ambiguously not?
So at this point, it is a positive, no question about it. And I think when our thesis coming into 2020 was that the younger generation of investors would look at yields in a 10-year yield that was north of 1% at that point, and come to the conclusion that over a 30 or 40-year investing horizon, the need to go into equities would be compelling. That has in fact played out. But from where we stand right now, again, this dichotomy between the valuation of the Nasdaq and the rest of the market, those kinds of valuations will begin to get stressed with higher yields, probably not till we get closer to 1% and well over 1.5% in the 30 years, perhaps closer to 2%.
Julian, what market forces are at play right now? I mean, does dollar weaken much more from here? And if it does, are we going to see a trade war with Europe?
Well, so you're not quite at the point, in our view, where Europe is going to get uncomfortable with a stronger currency. That likely happens somewhere north of 125 euro dollar. But obviously, and the equity market is certainly showing this, is that for the most part, U.S. exporters love the weakening dollar, which we think likely continues. Although, again, as we come into September, there is a massive positioning imbalance. Essentially, the short positions in the dollar are as large as they've been perhaps ever. And so that tends to mean a pause. But the longer term trend towards a weaker dollar, we think, is well intact and has been really a near constant since the equity market bottom in late March.